Welcome to the Childcare Genius podcast, the world's leading authority on childcare marketing, mindset, expansion, and profitability. Each episode will feature interviews with the brightest minds in the childcare industry to guide you into becoming a smarter business leader. Our hosts have opened 10 schools while raising 5 children. They are certified business coaches and are the top-selling childcare business book authors of all time. This episode is sponsored by Childcare Genius Marketing. Let Childcare Genius Marketing help you get fully enrolled and fully staffed. Visit childcaregenius.com for more details. Let's welcome to the Childcare Genius podcast our hosts, Brian and Carol Duprey.
Welcome to the Childcare Genius podcast.
We're your hosts, Brian and Carol Duprey. Thank you for joining us today. We have an action-packed episode for you. We're starting a new, well, it's kind of a series, but we're starting a new idea at the Childcare Genius podcast. So we've had a lot of people email us over the years asking us questions, right? So we're gonna take some of those questions. We're gonna start answering those questions on the air, the first Tuesday podcast of the month. But we have a bunch of them in backlog. So we're gonna do this the entire month of April. We're gonna take one question a week. We're gonna solve an issue for somebody who is struggling. And when you send your question in, you could email it to Brian, Brian, at childcaregenius.com. Just give us a question that we'll read live on the air. We will not tell everybody your name, where you're from. We're going to keep it anonymous. That way you could be open and honest and share anything that you're struggling with. And we're going to share that live on the air. And this month, we're going to be doing all the April episodes. And the first episode of May will also be an episode called Ask Brian and Carol. So somebody wrote in, Brian and Carol, what financial metrics should I review monthly to spot issues early? That's a good question.
Yeah.
Right? Because when you're dealing with finances, it's better to find problems early than late. And too often they come to us as childcare owners that need coaching, and they're really past where we can actually help them because they're too far down a financial rabbit hole and they're in trouble. And there's no worse place to be in childcare than in financial trouble. So by reviewing the finances early, it'll help you avoid that.
Yes, for sure.
All right. So first area we want to talk about it's metrics are like key performance indicators. You've heard probably people talk about KPIs. Well, metrics are just financial numbers that you should be tracking each and every month. And like by the 5th of the following month, you should be doing these things for the previous month. So, if it's April now, you should be already reviewed January's, February's, and March's for 2026 and know where you are after that first quarter's done. We're already three months into the year already, and we need to be able to analyze that. So first one area is enrollment or full-time equivalent, right? Why is enrollment important to monitor?
Well, enrollment's important because that's where your money comes from. But full-time enrollment is completely different than enrollment. You can have 100 kids, but if they're all part-time, you got to figure out what your full-time enrollment equivalent is.
Yeah, so that full-time equivalent, FTE, basically how we do FTE is a little bit different than other people, what they do FTE, but we'll tell you how we do it. A full-time child obviously equals 1 FTE, but a part-time child, it depends on what revenue you get. So if you have a part-time child that gives you 75% of full-time revenue, we count that as 0.75 FTE. If you have somebody that gives you 50% of revenue, full-time revenue, that's 0.5. So if you have somebody who's a 0.75 and somebody who's a 0.5 sharing one spot, that one spot will give you 1.25 FTE, or basically a 25% surcharge for that one spot. It's better to have 2 people sharing one spot making more money than one child in a full-time spot only making 100% revenue. So it's very possible to have your FTE higher than your license capacity and still be within state guidelines. So that's a cool thing because then you're making more money.
Yes, and that's why part-time is not a bad thing.
Nope.
And
If you do it properly.
right, if you surcharge it, right.
Surcharge, yeah, never charge. Like if some of the kids one comes one day, never charge them 20% of full time. Or if they come 2 days, never charge 40%, 3 days, 60%, or 4 days, 80%. That just doesn't work because you're not surcharging it. And you're giving away a spot at a fraction of the cost. You need to surcharge it by a certain amount, right? That's up to you what you surcharge it. But two spots together should be at least 25% surcharge extra revenue into your pocket. So that's something you'll want to track monthly. We actually track our enrollment weekly and our FTE numbers each and every week, have since 2014. So 12 years, I have 12 years of data every single week at every one of my schools. And it's nice to know those numbers.
It is. And it's also nice to look at the trends, like the time of year, what your enrollment is from year to year, so that you know when you get the most enrollments, when you lose kids, things like that.
Yeah, we've actually used those trends for hiring. So if you look back in history, most of our enrollments come in January. So instead of waiting for the enrollments to come in and then hire, we actually hire knowing the enrollments will be coming in. So you want to be proactive with your numbers. Historical data will help you with that over time. All right, the next area is tour conversion percentage. Why is it important to know about tour conversions?
Because you have to know if you have the right person doing the tours. If your tour conversion is very low, that means that maybe somebody else should be doing tours, or there's something in your school that you need to fix.
Or process, that's right.
And that it's also sorry, you
No,
said
it's
something.
all right.
I lost my train.
No, my apologies.
That's
Tour
okay.
conversion percentage is so important. Like Carol said, if things start dropping, now the average tour giver in America converts about 1 out of 3. Right, that's where that number is. And if you're not keeping track of actual tours and actual enrollments off that, then you're missing the boat.
That's what I was going to say.
We read your mind. I complete you, baby.
I was going to say that if your tour person says they're converting 90% of tours, you're not looking at the calls that you get and how many people book tours. You have to do the whole process. Because it's not just who actually comes in for the tour, it's the whole process.
Yeah, so actual tours to enrollments is a number you need to track, but you also need to track inquiries to tours.
Yeah.
And if you get 100 inquiries and book 3 tours, there's a problem with the phone call.
Yeah.
So you need to find out where the problems lie along the way. Don't ever just put your head in the sand, get the enrollments as they come, and never assume that directors actually good at that. I've seen teachers who run circles around directors as far as tour givers.
Right.
And whoever's the tour giver has to be the best salesman in the building, who can sell the business the best. And that who you want is the salesman. And I've wrote a book called The Art of the Tour. Carol and I wrote it together, apologies. And it's on Amazon. It's on our website at childcaregenius.com. And that shows you how to increase your tour conversion. So very important for that. All right, the next thing is to review your quarterly profit and loss statement monthly. Brian, that's confusing. Why? How could I read a quarterly profit and loss statement monthly? That doesn't make sense. All right, let me explain what that is. All right, so every single month, you're going to look back at a rolling quarter. So most people just do January, February, March, then April, May, June, July, August, September, and October, November, December, 4 quarters a year. I actually have 12 quarters a year. So in January, at the end of January, I'm pulling November, December, January. At the end of February, I'm putting December, January, February, December, January, and February. At the end of March, I'm pulling January, February, March. So I'm always looking at the last 3 calendar months every single month. So if by the 5th of each month, you should be looking at a rolling quarter back 3 months. And what you're looking for there is trends. What is my payroll? It should be the same amount every single month you're pulling a quarter because you're looking at a 90-day data. So your payroll should be the same or close. Your expenses, your income, your revenue, everything should be pretty close within a few percent of each other unless you have an extra payroll in there. So that's what you're looking for is red flags. Why is income dropped so much this quarter compared to last quarter? That means something happened in that current month that you're in. So that's why I always do a 3-month look back every single month to see what is going on revenues. Never just look at the previous month. Is the worst thing you could do is only look at 12 or look at 1 month worth of financial data. Because you could have an extra payroll that month, you could have got an extra subsidy payment, your food check might have been late last month and you get 2 food checks this month. Never look at a single month to see how much profitability you have, because you can lose 30 grand 1 month and make 60 the next. It just means you average 30. So, or average 15 rather. So you need to be able to look at the quarter as a whole. And that profit number should be steady every single month. That quarterly profit should be close to the same. The revenue should be close to the same, unless you go through a tuition increase or a pay increase somewhere during that time. And that number should be slightly off. But very important to do this. And if you do this, you're really going to get a handle on your financial indicators, and you're going to spot issues early for sure. All right, the next one is your budget, on track, off track. So having a budget, an annual budget, whenever you pull those quarterly P&Ls, it should represent a quarter of your budget because it's an actual physical quarter. So if you budgeted, say, $200,000 for payroll, that's $50,000 a quarter. If your first quarter of the year is at 60, your budget's off. So you need to go back and adjust and find out why you're off so much. And you can do the same thing with revenue. Why did revenue come in at $10,000 light when I budgeted for this? So it helps you identify red flag before you get to the end of the year and say, oh my God, I didn't make any money this year, which I've had people tell me didn't make any money this year because you never looked at it the whole year. You had your head in the sand. Stop playing ostrich and start being a business owner. Business owners need to know finance. This is what we do at Child Care Genius. We coach owners into knowing finances inside and out. We can help you if you are struggling. All right, next one is arrears. Why would you need to know the accounts receivable for parents?
Because you have to know who's paying, who's not paying, and what is owed to you. And if you have kids that aren't paying, they should not be attending.
Absolutely.
At all.
So our directors have to bring this information to a weekly meeting, and that way the owner, the director, the manager, whoever's in charge is going to see where all the parents owed, and you get to hold the directors accountable. They're the ones collecting the money, right? And if they're letting kids in without paying, that's a problem.
Yes.
It can't happen. So, no pay, no attend. That's our policy. You pay on Friday for the following week. You don't pay on Friday, you don't drop off on Monday. Right. Funny. One time, one parent says, I'll go get the money and bring it back to you. Say, sorry, you can't drop off without it. Well, I don't have the money. Sorry, you can't drop off without it. An hour later, they're find the money and they're back. Right. So, yeah, you're going to hear a lot of sob stories. You might give a little bit of a grace period, but more than likely, you've got to be pretty strict with them because they'll take advantage of you. Next one is payroll hours and cost. It's something you're definitely going to want to track. To see what your payroll costs. Your quarterly P&L that you're pulling every month will help you there. But another good number to track is payroll hours. Count the total hours every payroll and see if you're close to the previous payroll. If you start seeing wild swings in that, then you might be overstaffed or understaffed, and you can adjust accordingly. So, if you're doing 2,000 hours a quarter or 2,000 hours a month or 2,000 hours a payday, look for that to continue on and know what the optimum is. Know what you scheduled for, and then it's easy to know what your schedule is. Take everybody's payroll. You schedule this one for 8, this one for 20, this one for 40 hours this week. Add that all together. That's your scheduled payroll. And then compare that to the actual payroll. And if it's a lot less, that means a lot of people are calling in sick or you were overstaffed. Make proper adjustments. So knowing those payroll numbers and the cost are very important. Next one is subsidy billing collection. Why is it important to know what subsidy money is coming in or not coming in?
Because if you, we've had it happen where a child loses their subsidy, and if you get behind on checking who you've gotten paid for, the state is not always good about telling you when somebody's lost their subsidy. You don't know until you get paid. So it's very important that you know when people's awards are expiring so you can remind them that they need to check it and have somebody that you can check with. And if the payments are late, you need to tell the parents you cannot bring your child back until you get this straightened out.
Yep, very important. Subsidy is something Sometimes the government's a little late paying.
Yes.
And you've got to be able to take that into account with your finances as well. Like have a rainy day fund to help float you.
Yeah. Not only are they late paying, they're not very organized.
No, you want to run your business a whole lot more organized than a government will. All right, and the last thing is to track your profitability. Again, it'll show up in that quarterly P&L. You need to track it every month, quarterly, and know where your profitability lies. Our goal at Child Care Genius University is we make you more profitable. So if you're not making enough profits, you want to be more profitable, just reach out to me personally, Brian at childcaregenius.com. Say, listen, I'd like to make more money. I work hard and I think I deserve, more than 6% profits. Our average owner that we work with is 15 to 20% profitability, and we'd like to help get you there. So feel free to reach out, go to our website if you'd like a free coaching call and you're struggling in the area of finance, just reach out to us. We'll give you a free coaching call to help guide you in the right direction and make good financial decisions. We're here for you. So this concludes this episode of the Child Care Genius podcast. Next week, we'll be back with another Ask Brian and Carol episode. If you have a question, email me, Brian at childcaregenius.com, BRIAN, and we will answer your question live on the air.
And don't forget to hit the subscribe button so you miss a future episode of the Child Care Genius podcast. And we'll see you next week.
Bye-bye.
Bye.
Thank you for listening to the Child Care Genius podcast. If you enjoyed the show, please do us a favor and hit the subscribe button so you don't miss a future episode. Don't forget to visit our website at childcaregenius.com to see a list of services we offer to help grow your childcare business. Until next time, thank you for being a part of the Child Care Genius community.